downbeaten growth stocks caught a bid today, and Alibaba stock was no exception as it jumped nearly 10%. I think part of the reason why there's this potential for Alibaba to potentially find a bottom and to start getting support is because just one core segment, not even their e-commerce segment, but their cloud segment, could potentially be worth their entire market cap in the years ahead. And that's the purpose of this video, is to focus. We're going to ignore that cash cow that's generating 20 to 30 billion in free cash flow a year, their e-commerce segment. We're going to instead focus on their cloud segment, which only very recently went to effectively break even, slightly positive, and say, hey, could the segment alone be worth the current market cap, ignoring that 20 to $30 billion cash cow? If this is your first time tuning in, my name is Daniel, and you're watching Unrivaled Investing, a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. In full disclosure, this is not financial advice, and at the time of this video publication, I did own stock in Alibaba. I own the Hong Kong shares, for perspective, which I bought through using Interactive Brokers. 9988 is the ticker symbol on the Hong Kong shares. So in my last video on Alibaba, I called out how the current valuation was around 11 to 12 times earnings. And this was a video talking about how, is it possible that 2022 is a year of recovery for Alibaba after getting severely beaten up in 2021? And it's saying, look, the current valuation is just 11 to 12 times for just its core commerce segment, giving shareholders effectively everything else for free. In this video, I'm going to cover how just one of these free assets could potentially be worth Alibaba's entire market cap, the total value within the next 5 years, ignoring all the other goodies that you're looking at here with Alibaba. And so currently, China's cloud market is a fraction of the US, but growing at a faster pace. It's expected to grow to around $155 billion by 2025, and this represents a nearly 40% growth rate in the years ahead. Alibaba is the #1 cloud player in China with 30% plus market share. Here's one chart indicating closer to 38% market share, and remains significantly larger than its competitors. If they maintain this 30% plus market share and the market grows to 150 billion plus by 2025, this alone could generate 50 billion in revenue. This segment alone, Alibaba Cloud, could be around 40, 50, maybe even more billion in revenue in the next few years. That's US dollars. But the reality is they're not just playing for China, but also have global ambitions. They're looking not only to win China, but compete with the best the US has to offer, the best that US has to offer, and actively compare their functionality with Amazon and Microsoft, the #1 and #2 in the world. Here it is. A lot of this information is from their recent investor day, effectively saying vendor A, who do you think that's going to be? And vendor M, who do you think that's going to be? And saying, look, overall, they think they're actually #3, and they're ranking how they compare on various different key metrics like compute, storage, network, security, all these different things. But not only are they competing with each other, but I'd argue they're also operating with similar playbooks where they're looking to optimize the hardware that they have and that they're investing in. And here you can see headlines how both AWS and Alibaba are designing their own chips to get improved performance and cost. Here's Amazon Web Services plans to design more of its own semiconductors. Alibaba launches own chip for its servers, cloud computing platform, and new breakthrough for e-commerce giant, both announced around the same time. And so, there's clearly a lot of potential here. And while Alibaba's cloud segment is rapidly growing and tapping into a huge market opportunity, the reality is that there will be turbulence, however. Look, nothing grows, straight to the sky. There will be, challenges. They face tough and well-financed competition. AWS and Microsoft are extreme competitors, both domestically and abroad. Tencent is also a competitor, as well as Baidu. In addition, their own government has been hypersensitive recently over information security and announced a temporary suspension of working with Alibaba Cloud for the next 6 months following a self-reported bug. So that is a recent headline, and that could cause pressure on the segment over the next few months. So that is something that is worth considering. Okay, so what do I think about the cloud valuation in particular, and how do I get to that idea that this segment alone could be worth Alibaba's, effectively nearly their entire market cap. So first, a quick plug, where if you're interested in following along with my personal financial journey, go to unrivaledinvesting.com, where each month I call out potential multi-baggers, as well as my personal portfolio. We also have an exclusive community dedicated to learning and trying to find exceptional companies, where I'm interacting on an almost daily basis. So if you're interested, go to unrivaledinvesting.com, click join the journey. And if you enjoy videos like this, please make a point of hitting the subscribe or hit the thumbs up button. So as I'm thinking about Alibaba Cloud's valuation, first recognize this cloud computing segment has been lifting off these last few years, nearly tripling just in short order. And so if AWS is any guide, effectively saying a cloud business at scale, this business could have juicy margins, and AWS has around 30% plus operating margins. And arguably, some folks, when you start getting margins like this, start actually giving you even higher valuations. There was recently an interview with Bill Miller, an investor in Amazon. He's a billionaire in his own right, and he talked about how AWS could be worth, the entirety of Amazon's market cap. A very similar argument, saying, look, this business could be worth 15, 20, 25 times sales. Now, I play a much more conservative approach when I'm looking at things, as you'll see here. So here's the question, that I think shareholders in Alibaba need to think about just for this cloud computing segment is, it's a question of 30. Can the cloud segment grow at 30% annualized, achieve a 30% margin, and get, let's say, a 30 times earnings valuation over the next 5 years? And could they achieve this over the next 5 years? If so, then their cloud computing segment alone is worth nearly their current market cap. And so, and this gives no credit to the $20 to $30 billion in cash, in the cash flow and the cash cow that is their e-commerce business. And so I look at this and I'm thinking, and keep in mind, I'm using, once again, that 30%, 30 times 5 years from now, assuming a 15% tax rate in China. So that's the question is, does this get you there? And if so, do you think shareholders ultimately wake up and go, holy smokes, in the next 5 years, people go, wow, this one segment alone, effectively could provide a backstop to Alibaba's current valuation? And so I'd love to hear your take. If you're an Alibaba shareholder, or if you're against it and you're like, I don't quite buy the thesis, I'd love to hear your take on it, because I'm looking at this and I'm thinking this cloud segment could just be huge over time. They've clearly crushed it. They're growing very quickly, looking to be a top contender. And it just seems like the market clearly is not giving appropriate credit to this core segment that could be worth their entire market cap in the next few years. Love to hear your thoughts, and please make a point of hitting that subscribe and thumbs up button if you enjoyed this video. Thanks so much for tuning in.